Oh, it seems like I can actually hear anyone. Hold on. I'm gonna put my audio to that. Oh, okay. Now I can hear. Apologies. I thought it was coming out before, but I couldn't hear anyone. Okay. So yeah. Let's see. Gold is fine. Okay. Yeah, it's gone like a rocket. I mean, the move that's happening on gold right now is a seasonal move, isn't it? So the seasonal move from the end of the year all the way up until roughly about February. And keep in mind, gold, Russia is buying gold, China is buying gold. I think Iran is also buying gold. There's a new digital currency. There's a new digital currency that's being proposed right now by Russia and Iran together to collaborate to create a new currency backed by gold, digital currency backed by gold. So possibly they're trying to rival the CBDC, the central bank digital currency that is being played out and all of that, but that's a different discussion. So basically what we're seeing in gold is basically gold going all the way up, and the move is most likely going to continue. So we're at 22nd. We might probably have a little bit of pullback, but it's going to continue to February, ideally. And also because of the war that's still going on. So remember, anytime there's war, gold always tanks. And that's what's exactly, been playing out in gold for us for the past few days. So if you were in the trade, kudos to you. If you missed it, trust me, there's more coming. Because our entry date was, you could have gone in from the 14th or 21st or 22nd, and see, could have some chat. Yeah, it's not, there's always the market, isn't it? You can always make more money from the market, so there's always time. So you could have gone in from somewhere around this region right here, depending on if probability aligned for you that time. But you could have gone at a safer, bet around here on the 22nd and still be able to profit 1,377 pips. So that being said, let's move on to today's analysis. So Mr. Auzo asks for CHF. Right, so CHF is actually looking good. We have that on COT seasonality. Now, keep in mind, guys, I don't think we have the probability tools for CHF yet because everything is coming in little by little. So, yeah. So it's just something you have to be careful about. Okay. So COT for CHF goes, we have CHF that's going long, right? They're buying, right? So what we can see is right here, we can see them buying, and this, the report is quite new. So it came out on the 17th, so that Tuesday, so it's quite new. They're going long. That's all we need to know. And now the next thing we need to know is, do we have a seasonality alignment for CHF? All right. So we are at the 22nd. Right here, this is where we at. For now, I would not trade CHF. Personally, I would not, because COT is saying long and seasonality is saying short. Okay, so anything in regards to CHF, I would not touch. But because you pull that three assets, you want USD CHF, AUD CHF, and CHF JPY. What we can do is we can check the USD. We can check USD. We can check AUD and check JPY. So if we find an alignment in any of these three, then you might still have a good trade. So, but on CHF as the base itself, it's not worth it. So the next thing to do is check USD. Let's check AUD. Let's check JPY. Okay. Let's let that load. So from USD, let's not even bother going to the USD. So USD CHF, it's not a good trade. For now, we don't have a clear line of sight. So I'm going to delete the USD out of there. AUD, I'm always skeptical about this asset because sometimes the commercials, they tend to get it wrong. Not every time, but sometimes I do get this one wrong. So I'm very, very careful with AUD pairs. JPY. Let's wait for that to load. While that is loading, we can, okay, it's loaded. Then JPY is also short. Now keep in mind, because we know the seasonality for CHF is all short at the moment. So if JPY is also going short and AUD is going short, it doesn't really give us a clear sight, but we can still use that. So if we check AUD, for example, and see if it's going short, then most likely AUD might be weak against against what's it called? CHF. So we are currently here. So we're on the 22nd, right now. And the beautiful part of it is, yeah, AUD is going short. So we have two alignments. The short might probably last up until the 25th, which is Wednesday, or it might last up until 29th, but there will most likely be a pullback. So seasonality, we go AUD short, and then we go JPY. Let's see what JPY says. Now, if you don't understand what short means, short means just sell. That's basically what short is. Short is sell, long means buy. All right. Yeah, let's see. And another beautiful one right here from JPY. So I'm just going to zoom in a little bit. Yeah, JPY also looks like a sell all the way across. I mean, for the 5 years, we might have a little bit of pullback, but ultimately it still looks like a short to about 11th. So JPY also short. Now, guys, you quite know this, right? We already have AUD going short, JPY going short. So your CHF, AUD CHF will be short. CHF JPY will be long, right? Just by knowing this, because we know that CHF, let's even ignore the fact that we know that this CHF is saying long on the COT report, right? The moment you know, so I'm going to put trade here. The moment you know AUD is short and most of the stuff are pointing shorts, then across the entire board, what you want to do is any asset pointing towards, let's say USD, AUD USD, for example, would have to be short. AUD JPY, for example, will be short, but now you can do short because both are pointing short. So AUD JPY you want to stay away from. GBP AUD, for example, will be long because AUD is going short. So in terms of AUD CHF, then that will be short right there. And then CHF JPY, that would also be, no, that would be long because JPY is short. So CHF JPY will be long. Now you can mix this across the entire pair. Now, regardless of what I'm going to say right here, I'm going to classify this as high risk, both of them as high risk. And the mere fact is I do not have probability for these two. Until we get probability, we can't really decide, right? That's the trick of the game. It's a three-way system. It's not two. But to put everything a little bit more in your favor, so let's check. So I'll check CHF JPY, for example, right? So we are saying CHF JPY would be long, right? Now, if we go and check, where is that tool? Apologies, I'm trying to look for something. Here we go. If we check wheel spread, for example, the wheel spread is telling us, the long always comes before, it's telling us short. So for this one, it's literally looking like even a higher risk. Yeah, we'll use what we have. From the wheel spread, it's looking like a higher risk. So you have to be very, very careful. From the AUD, I think, is it AUD JPY that we were looking at? Yeah, no, not AUD JPY. AUD CHF. So with the AUD CHF, right, because we know AUD is already looking like a short, then AUD CHF, ideally, we're looking at it going short, right? And now Will is literally pointing down a little bit, and look at this spot right here. There's a little other block region right here, which makes it very beautiful for you to go in from tomorrow. So tomorrow you can just wait for price to get here, just looking at technical, and then you sell that. And you can sell that probably to here 173 pips. So if we look at it, the best one that has the lowest risk, I'll put this one as a super high risk, and this is a high risk. I can't put it at medium or low because of no probability. Remember that. But this one looks most logical. AUDCHF looks the most logical going down. So what you want to do is wait for price to get somewhere in this zone, then sell. Now, if you know that your ATR on a daily is 74 pips, you can set your stop loss at 74 pips. But if you want to do it slightly on a slower time frame, you can do this 28 times 2, so that will give us 56. Then your stop loss will be at 56 pips. So if you go in, for example, let's say here, for example, you want to put your stop loss at 56 pips. So somewhere around here, right here, right? That's where you want to put your stop loss at. And then from there, ideally, you shouldn't get rated. And your first take profit could be at 28 pips, the next one at 56, and so on, and you leave your third one to ride. So for me personally, if I was to trade this, I would trade, if I was to trade out of the two, for example, AUDCHF or CHF I would trade AUDCHF. Even though I know I don't have the probability, that's what I'll go for. AUDCHF, I'll focus on that one trade and get my money out of that one trade. Now, in regards to entry and all of that, let me just delete this indicator right here. So in regards to entry, what you can do is as simple as, where is that stuff? So you can do this, right? If you are like, oh, I don't want to do the analysis in regards to what's it called? I don't want to do analysis in regards to drawing support and resistance, trend line, and all of that stuff. And you just want to keep it straightforward, just want to approach it in a mathematical way. So you already know you want to sell AUD CHF, right? Cool. So if you want to sell it, you want to know where to enter from. And it's not a new month, it's a new week. So what you want to do is look at the average of the down candles, right? Over a period of time. So I normally go for over 5 previous candles. So this one will be 30 pips plus. I'm doing on a weekly time frame because the weekly is most likely going to have a week to the upside anyway. So I'm going to do 30 plus 80 plus 45 plus 43 plus 16. And then I'll divide that by 5. So that gives me 42.8 pips, right? Hope I'm correct. So what I want to do is I want to wait for price to pull at 42.8 pips minimum. Minimum price should pull at 42.8 pips before I even consider going into this asset. So let's see. All right. Let's just put it around there, right? Now, the next thing you want to do it for daily as well. So just to give you a range. So you do 17 plus 44, just in case, price doesn't go all the way there. So you want to look at the down candles. You want to look at the wick. Plus 30 plus 16 plus 49. All right, that gives you 156, and then you divide that by 5. You get 31.2 pips, right? So somewhere around here, right? It's a very narrow. It's not that big of a size. It's narrow. Let's just say it's around that period, right? So what you can do now is if price doesn't get to this region, right? Price doesn't get to this region, then I won't take it. Now I put a support and resistance, right? And you can see right here, there's a line right here of resistance, and there's a line right here of resistance, which shows that we're actually on the right part. Now, worst case scenario, price would do a double, a wick at the top. But if you have your stop loss at 58 pips anyway, or whichever, 56 pips. So even if you went in at this point, let's say, and you have your stop loss at 56 pips, ideally price will raid you. You still have an extra 40, an extra 12 pips to go. So price wouldn't touch you. And that's how I'm going to approach this market. I hope I'm very clear in regards to this. So, yeah, that's it. So quite frankly, this is a trade I want to go into. It's a good trade. I don't mind this. No, start that one out. Yeah, so I'll start this one. Short this, I said. So this is a good trade that I will look to go into, even though I know I don't have the probability. It's a risk that I'll be willing to take, but take the risk, you know, take your logic with you. Don't just put all your bang in it because, you know. So it's a risk I'm willing to take. And yeah, it should be a good one. Long story short, you have 3 take profit, use your ATR value for it. You can do 70 some pips. I mean, when you see this anyway, you always know a pullback is coming. So it's quite straight. Nice pull, Mr. Uzo. So minimum, at least you should take about 80 to 90 pips, if not 100 plus from this trade. So yeah, I think that's sufficient. That's sufficient enough. So for the guys that have the membership, the probabilities will be updated little by little over time, and we should get everything, you know, up very, very soon. In regards to how to progress further, for those that want to become a member, you can get the membership on the website, right? business.damempire.co.uk. Just go to the pricing page. You can get it from there. There won't be any discount anymore. I've done the discounts last year, end of last year. So if you're unable to get in, that's it. And yeah, I think that's all I have for you guys today. I try to want to keep these sessions as short as possible, not making them too long. Mr. Ozo, the challenge with the probabilities, it's a massive amount of data, right? So we're computing data from a lot of sources and years. We're talking about 50, 60, 70 years, right, of data. So to process all of that data, it costs quite a lot in regards to you know, computing energy and in regards to funding. So what we're doing is we're taking them in batches, right? You're going to be getting them all in batches, little by little, and they should be out. Ideally, I was aiming for the end of this month, but I don't think the end of this month is possible, to be quite frank. It might be, it might not be, but sometime within February, it should all be done. So at every time anyway, probability is always going to be a lagging one. It's going to be a lagging one for the first session of the year. So so as to just give you guys the right information, because if I do rush it at the end of last year, then we won't pick up, you know, price fluctuations from the end of the year or from December, which then makes it inaccurate for the December roll this year. So that's why I wait till it finishes and then we go from the start of this year. So I hope that answers the question. Mid-February maximum, you get it. If not, by the end of this month, you should get it. So we're working on it at the moment. As I said, the one for gold is out. So if we look at gold is already out. Gold was the first one to come out. So gold, we have gold. And you can, I mean, it's only right for it to take time, because if you look at it, we have it all the way to December, right? December of the year. So if you have a prediction all the way to the end of the year, you must be willing to wait for that, because I don't think anybody else gives prediction all the way to the end of the year and also have it to be as accurate as it is. So it's one of those things that take time. Okay. So yeah, guys, that's all I have for today. I want to really keep this very short and very concise. So thank you all for attending, and I'll catch you guys in the next one. Make sure you trade safely and effectively. You know, don't trade with emotions. If you're trading and you're losing a little bit of money or prices in at your entry, you know, take your time. Don't rush. Just wait for it. Take some break. Watch a movie. Go out for a walk. Don't sit by the computer. Okay. All right, guys. Thank you very much for attending. Bless you all. Love you all. Have a wonderful trading week ahead. Bye.